This week on Crunchweek, we're talking about all the earnings news, online video and television having some interesting developments, and Path's layoffs. Hey, welcome to Crunchweek. I'm Colleen Taylor.
I'm Anthony Ha.
I'm Ryan Lawler.
And another week of lots of tech news. What really dominated a lot of headlines consistently was all the earnings. A lot of companies came out with their quarterly earnings this week.
And I think, the two biggest ones were probably Yahoo and Google, at least for our audience. And Yahoo was one of those interesting ones because they technically came in ahead of estimates, at least on the earnings front, but their revenue was essentially flat. And the estimates weren't that optimistic anyway, so I think a lot of people overall felt they were pretty disappointing. And actually, Alex Wilhelm wrote a post the next day kind of about how, it kind of shows the way he described it as cracks in the mobile strategy. I think the article is a little bit more nuanced than that, and I think what it feels like is that that Yahoo has we've had Marissa Mayer on stage talking about like all these numbers in terms of user growth for different Yahoo services that have been revamped, but it doesn't seem like that's really kind of been reflected in the bottom line yet.
Yeah, there have been a lot of acquisitions, but there are smaller companies that obviously aren't adding anything to revenue. And it seems like investors might be starting to get a little bit anxious now because Marissa Mayer's been there for like over a year. It's like, where are the results?
Well, at the same time, I mean, any turnaround like this is going to take some time, right? I mean, even if you look at the case of AOL, in which Tim Armstrong came in and actually, it looks like he kind of righted the ship. Anthony is looking at me a little.
That's debate. I mean, well, yeah.
Anyway, but back to Yahoo. But it takes a while, and I feel like Yahoo.
I'm just kidding. AOL's great.
Very bullish on that stock. Bullish.
We're all shareholders. But I feel like Yahoo, investors are they're always impatient, and they have a reason to be because they've gone through, 5 or 6 CEOs in the last 8 years, and they actually haven't given much time for a turnaround to actually take place, I feel like.
Right, and I think it's, it's on the one hand, I think there's sort of, obviously there's sort of the honeymoon period when Marissa came on board, but I think there are also very concrete things that have improved when they're, again, talking about user numbers for a lot of the core products, or when they talk about sort of, the desirability of Yahoo, of actually going to work for Yahoo for, talented people in the tech world. So I think, there's something, but that's only going to get used at a certain point. Investors are going to want to say, okay, that's great, but why is our numbers still basically the same?
Show me the money. But one company that did show the money was Google.
That's a pretty good transition there.
Good segue.
Well, yeah, it was. I think part of the reason why people were interested in Google, besides the fact, it's just obviously like a really important company, was that its last quarter was actually a bit disappointing, but it bounced back this quarter, and so I think. I mean, Google is sort of, I think, a company where it's not like there's sort of like huge product launches or things like that, which really, except for Google Plus a couple of years. But other than that, tends to be, I think it's just sort of, a lot of it is just sort of fluctuations in the online ad business. But it does seem, at least, for now, that things are pretty positive.
Yeah, the stock went over $1,000 today for the first time. So
yeah, and if you listen to the call, I mean, this is kind of beyond just the performance. One of the things that I found interesting was, number one, Larry Page basically said, that they can't spend their R&D money quickly enough. He basically said that, it's very difficult to make real significant investments in long-term R&D relative to the size that Google is. So that was kind of interesting. The other interesting thing was YouTube mobile now accounts for 40% of all of their traffic, which is kind of crazy.
Yeah.
It seems like one of those things where, everyone sort of thinks things are going that way, but then this year, I think in general, it really feels like the year where, okay, this is not this theoretical thing a couple years in the horizon. This is the thing that's happening right now. And I think happening much more quickly than most people expected, which is kind of terrifying, I think, for a lot of companies with established businesses. But a lot of those companies do seem to be sort of crossing that, challenge, or addressing that challenge without, totally catastrophic results.
This is actually the year of mobile video.
Right.
And speaking of video, another segue coming. Some big news in sort of online video. getting closer, cozier finally with traditional television, these two worlds coming together?
Yeah, it's kind of interesting. So a few things happened this week. The news came out that Netflix is talking with a couple of different cable providers about potentially being added as a service on their set-top boxes. So, you won't even need to switch to Netflix on your connected TV or switch to it, on a Roku or streaming box. It'll actually be, right there alongside live programming and your DVR'd content and all of that stuff, which is kind of like something that it seems like it's been building toward for a while, but at the same time, there was some fears, I think, in the cable industry for a long time that, Netflix was actually going to compete with them.
Yeah, and in some ways they really are. If you think about people who decide to cut the cord, a lot of the reason they do so is because of Netflix. They start to realize that all they're doing is watching Netflix. And so if Netflix becomes available on cable boxes, are people going to realize that they're only really watching the Netflix programming? There's a study that came out just last week, I guess, but it was that a third of millennials only watch online video and no broadcast TV at all. So this is obviously the future. Netflix is the future. I think Comcast is maybe finally waking up to it.
I do wonder about I feel like cord cutting is something that's like an interesting topic that I'm sure Ryan is like so tired of talking about, but I think that like where it is something where people talk about it sort of ad nauseum and then the numbers don't really seem to back it up for a long time. But like I do wonder if like if it does seem like if people sort of maybe our age or slightly younger, that it's a shift that's coming, but it's just taking longer to get here than maybe sort of some people expect. But eventually, suddenly, there'll be a year where we have like with mobile this year, just like a big switch.
Well, I think the research numbers aren't totally accurate either. I feel like TV viewership numbers have to be inflated in some way. And there was some research that came out this week about Nielsen numbers being actually very inaccurate because they don't really poll many young people and minorities, and this is like the growing groups of people in the United States right now. I mean, do you guys have a traditional TV? Do you have a cable?
I do, but only because it's cheaper to actually have TV and broadband than it is to have broadband only. Yeah. Which is kind of strange. But,
that's true.
But they want to just incentivize you to get you on it into the habit of
exactly.
Paying for it, right?
Do you have
I have an Apple TV. That's it.
Yeah, I just have.
Just in case people were not like tired of like accusing us of like having like only Apple products. I have an Apple TV and that's my only TV.
yeah. I don't pay for cable. So it's just interesting that these worlds are kind of coming together.
Yeah, I mean, to go back, I don't want to harp on it too much, but to go back to the cord cutter piece, I think we're at this interesting point where, cable viewership is actually holding steady, or at least cable subscribers are holding steady, but they're not growing. And so what you're seeing is new housing increase, you're seeing new houses but that's not being reflected, that growth isn't being reflected in people getting into that house and signing up for cable TV, which is kind of interesting.
Yeah, interesting times ahead. Last thing I want to talk about is some sad news, actually. Path laid off 20% of their workforce this week. And with Path, their company is relatively small, it's like 50 people, and so there were 13, I guess, that were given the axe, and so it's interesting to me just because Path has been so sort of hyped up, and it doesn't seem like that long ago that they were like the most shiny, cool new thing, hiring, money, all this stuff, and then, when a layoff like this happens, it's sort of.
So they did talk a little bit publicly about, did they say anything about the reasons for the layoff?
No, so I talked to a representative from the company. It was really kind of like hunkered down, no talking to anybody, which is very disappointing. But talked to a representative, and they just said it's a realignment of the company. They're really focusing on Path 4, which is their next version of the app. But I'm not sure, who was laid off that it wasn't contributing to Path 4.
Right.
It doesn't really make sense.
It starts to sound very sort of generic.
Yeah.
Did they give you the line about like, we're doing this also out of respect for the people?
Yes. Yeah. Oh, yes. They can't, because I said, was it, what department was it in? I heard that it was mostly marketing people and some data operations people, and they said out of respect for those who are being let go. It's like,
if you gave us like a list of names, that would be out of, if you didn't do that, that's out of respect. But like, at least, oh God, I hate that.
I think But sort of behind the scenes, we've been reporting Path is trying to raise money, and it's pretty clear that like they're working on their next round. They don't want it to be a down round, but they also sort of have to show that they're on a path to profitability. And to be honest, with a company like this, they weren't generating revenue until recently. And so I think they probably, it's tough to talk about layoffs with any company, but they probably grew too quickly based on their headcount relative to the amount of like revenue they were growing. And I think part of this is probably to justify to future investors that they can actually, continue to operate and maybe make some money and not just run out of runway.
Yeah, I feel like everyone has been trying to follow this Facebook model of not focusing on revenue to grow their user base and then worrying about revenue later. And I hope that that's kind of coming to an end and that companies are learning the lesson from companies like Path and even Twitter isn't profitable now and it's probably not going to have as huge of an IPO maybe as it would if it were profitable. I think that era of everybody saying, we're just going to focus on growth and money will take care of itself and we're going to hire 50 staff without making a single dime in revenue. I hope that's coming to an end because it's just not realistic.
Well, it seems like that is a game where it's sort of like an all or nothing game where like you either have to get to like incredible scale or the ad revenue, at least normal ad revenue is not going to get you to meaningful to at least the kind of thing that an acquirer or an investor would be super excited about.
Yeah.
Right. I mean, the other thing is just if you look at this in terms of like headcount and scale and like what you can do with teams, I mean, just as a comparison, Instagram was like a dozen people when it was acquired by Facebook.
Which is like the most extreme example.
Yeah, it's the most extreme example, but at the same time, it's kind of like these companies that build these huge teams, especially when they're like very product focused, it just doesn't seem to always make sense.
Yeah. Last thing. Anthony, this is your last time joining us for Crunchweek here in San Francisco.
Yeah, or at least as a regular, semi-regular, I guess, contributor, guest, because I'm moving to New York I'm flying out for Berlin next week, and then I'm going to fly straight to New York. So.
Yeah, cool. What are you excited about? Because you're going to obviously stay with TechCrunch forever.
Forever, as we all will.
What are you excited about the New York, startup tech scene?
I mean, to a certain extent, I think it's just I feel like it's an area where TechCrunch is we've certainly covered it. We've covered many New York startups, but I think it's just kind of that it feels like that scene has sort of reached a certain level of maturity beyond, I think for a while, maybe I'm totally wrong about this and, people are going to like mock me as soon as I get there. But my sense is that, for a while it was this very nascent thing where people kept talking about it, but it was like such a small community that it was like, it's still in the very kind of boosterish stage. And now it's like at the point where there's, obviously there was the Tumblr acquisition and, but there's like, that there's like a sort of more maturity to the business and like different kinds of companies kind of coming out of it. So I think just having more people there physically to kind of, to actually meet the companies, I think is going to be hopefully, really good for us.
Cool. Well, look forward to seeing what you come up with there. But we'll miss you in San Francisco.
I'm going to miss you guys too.
Okay. Before we all start to cry, thanks for watching Crunchweek, and check back in next week. We'll be doing a Crunchweek from Berlin for TechCrunch Disrupt Europe.